All right, we are going to take a look at the market and see what the market holds for us. For next week, we're going to do quite some analysis, starting from the monthly to the weekly, and then down to the daily time frame. Okay, then we will drill down lower and walk through the different scenarios that I have. For today, I have 3 scenarios I think the market could take, and we're going to investigate each and every one of them. So this is the monthly chart for SPX, and as I had said in a couple of my videos in the past, or I think one of my videos, I had expressed concern, and I have been expressing concern as to where the market is. For those who want to be investors, for example, you want to buy a stock and hold for more than a year, you want to be careful because the market is in a topping stage right now. Okay, so you want to be very careful. And I'm going to show you why I think so. If you know what the divergence is, the market is going up, as you can see, while an indicator like RSI, relative strength indicator, is going down. Okay, this shows a loss in momentum. You know, the market is going up, the RSI is tending down. This is what you call a normal bearish divergence. You can also see that the ADX is also going down. All right. So similar to the RSI, the ADX is going down while the price is going up. So this is telling you that you have to be very cautious at this point, because it's simply saying that the market is losing steam and there's probably going to be a change in trend very soon. If you watch my last video, I talked about the relationship between the 10-year bond yield minus the 2-year bond yield and the stock market, also signifying that something is coming down the line very soon. So you just want to be very careful, okay? Now, this is the monthly chart. Let's go to the weekly. Again, as you can see here, let me delete this line. As you can see in the weekly, the market is trending up, but the indicators are trending down. Same thing for the MACD, it's trending down, okay? Same thing for the ADX. So you can see price is going up and the indicators are trending down. You want to be very, very careful. Now let's go down to the daily. The thing is that no one really knows when the market is going to turn, all right? You can have a very good idea, but I don't think anybody has that 100% certainty of when the market is going to turn down. But we think it's very, very close. We need to know where our critical levels are, all right? After this, we'll go down to the daily chart. We need to know where the critical levels are. So let's draw this line. At least if you have 3 touches, that's 1, okay? 1, 2, 3, 4, 5, all right? So this 6,040 is an important level. Let's draw another line here. 1, 2, 3, 4. Okay. 5969, 5970. Let's draw another line. Let's see. What do we have here? If we can draw this line here. 1, 2, 3, 4. All right. Let's see if we can draw one more line. This is a good level here. So we have, maybe we can count this one, even though it penetrated, but or we can just say 1, 2, 3, 4. All right. And just add this for 5. So these are the critical levels that I have for now. I mean, there are other levels, but I think this is enough for now. So now let's go down to the daily. When you look at this chart, what can you see? The first thing that jumps out in this chart, first of all, is this area. Okay. We can see that the market has tried to conquer this area, but is still finding it difficult. Still finding it difficult. So there are a lot of sellers here. The market came here, sold out, came here, crossed it, came back down, came back up again, and sold hard again. Okay? So this is a very strong resistance area. You just want to, leave it as a box and not a line. So after this area, what next can you see? The next thing that you can see here is this bearish engulfing candle. So you have a bearish engulfing candle and doesn't portend good for the market. Pretty much signifies that the market came back up here, sold out, and formed a bearish engulfing. So we're going to look for a confirmation. All right. This is pointing to the fact that there is a high probability that the market is going to go down. How far down, we do not know. But most likely, the market is going to head down. All right. So when the market is going down, you need to watch out for these levels. 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 Let's see if we can adjust it a little bit under the daily. And it's not really a line, quite frankly. These are areas, but let's just draw a line so that we do not, just for clarity's sake. All right. So let's see if we can adjust this a little bit. Yeah, we can leave it here. It's pretty much an area, this area. Okay. Is there another place, another level of support that we are missing here? Let's see. I think for now, let's make do with these levels. Okay. So at this juncture, we are going to take a look at the different scenarios. We have looked at the monthly, we have looked at the weekly, we have looked at the daily, and everything seems to be pointing down. And at this point, we'll take a look at the different scenarios that I have and see what the market could possibly do next week or the weeks ahead. This is scenario 1. This is a triangle. There's a possibility that the market is trying to form a triangle here, which is a corrective structure, and keep heading back up. All right. So come down for A, B, C, D, E, and then we head back up. A, B, C, D, E, we head back up. I have these lines here just to show that a triangle will normally have 3 waves each, like this, like this, like this. That's why I have this line here. So if you want to be very careful, maybe when the market opens on Monday, you may just bounce a little bit and continue down, and then go back up, come back down, and then continue going back up to make another all-time high. However, if the price comes down and crosses this level, 5962.92. So if price comes down and crosses this level, then you can forget about this triangular structure. That structure is invalid. And if it crosses this structure, that will probably lead us to our scenario 2, which is what we're going to take a look at next. So this is scenario 2. And this scenario is assuming that the market is going to form an ABC structure. ABC. You can see that this structure is corrective. Okay. A lot of overlaps. And that is why I was very careful when the market got here. As a matter of fact, I went short, made quite some money coming down here. If you can see, I went on high alert once I saw this candle here on the 1-hour chart. Immediately this candle popped up, I went on high alert. I should have actually gone short, but I played a little safe, went short a little bit later, and closed out. I'm still a little short, but I've closed out most of my positions. So this is assuming an ABC structure here, A, B, C, and we continue back up. Then the last scenario is pretty much the worst scenario. The assumption for this scenario is that this correction here is still not finished. So this will be an A, this will be a B, and then a C. So this is what you call an expanded flat correction. A, B, the B passes the beginning of A, and the C extend below the end of A. It could also stop a little inside of this place to form what you call a running flat. Okay? And then the market continues back up. Whichever way, whether it's a running flat or it's an expanded flat, there is a likelihood that the market will continue going back up after this correction is finished. So this is the worst case scenario. We're going to see how things play out. You just want to be very careful. Okay. How do we know which one will play out? Pretty much looking at the wave structure, wave structure, we're going to know which one, whether it is this one, or it's going to be the worst case. All right. So trade very carefully and be safe out there. All right. Please, I will appreciate it if you can like my video, share my video, subscribe if you gain some value. That really will help me with the YouTube algorithm. I really appreciate your audience. Have a wonderful week. Thank you.